Economic growth could be slower than expected. What about this rally that totally ignored Italy? And some super questions that we have to answer. I'm Peter Switzer.
I'm Paul Rickard. And we're mad about money.
Let's talk about, I'm really worried. In fact, I wrote a story this morning on switzer.com.au called I'm watching the Fockers. Now, be careful what I say.
Be careful, Peter.
Yes,
this is going out on the World Wide Web. So.
I'm watching the Fockers, and the Fockers are those journalists who are over the top, talking about this economic growth number being so scary, when in actual fact it might be just a little blip for one quarter, then we rebound. But I'm sure my mates in the media will make it a really negative day.
Yeah, look, if it is negative, they're going to have a field day because it's anti-government, it's anti-everything. The ABC will get really excited about it.
Anti-capitalism.
Anti-capitalism. I mean, look, I'm just mad about the fact that we actually take anything out of the ABS and give it any seriousness.
You're mad about the ABS, aren't
Sorry about those poor boffins down in Canberra, but the ABS has no credibility, right? We know what happens to the employment data month by month. It's just nonsense. And there's no way this quarter can be negative. But yet, the way they compile these growth numbers...
It could be. That's just fact. It
may well be negative, but even if it is negative, I don't believe the data. It's rubbish. Okay. Absolute rubbish.
Well,
I'm not an economist, Peter, so I can say that.
Yeah,
right?
yeah. But the important thing is that the Reserve Bank, and they are filled with economists, they're expecting a bit of a dip. And let's face it, there was Brexit across that quarter, the fears around it. There was this ridiculous 8-week election campaign that killed confidence everywhere it went. And then, of course, we had the campaigning between Donald and Hillary, which wasn't positive as well. Yeah, but
there's some underlying, you're right, there's some underlying reasons, okay, put on the election, but at the same time, retail turnover is up. You look at the skyline with Crane, Sydney, Melbourne, Brisbane, they try to tell you construction spending is down. Okay, we know it's come out of the resources sector, but the skyline is busy. The employment data is busy. The roads are busy.
Job ads are
the rural economy is doing well, right? There's no way this economy is negative growth in the September quarter, no matter what the ABS says.
Okay, so just be careful about scary headlines from my mates in the media. Let's talk about the Italian referendum. We were scared on Monday when the referendum was going on, but Europe and the USA in particular couldn't give a toss.
Well, I think the correction, the we is you were scared on Monday, Peter. I wasn't too scared. It's Italy. Who knows where Italy is?
As you said, you're not an economist.
And the Americans are somewhere out there. But look, I think that the American market is no doubt optimistic, and I think you're actually right. The Templeton's phases of market psychology. I think the second or penultimate stage is optimism. The US is now optimistic about their market. Things like Italy aren't going to matter in the short term.
Trumped Italy.
Trumped Italy. Yeah, yeah. That's like a soccer headline or a football headline. You stick with that, Peter.
Yeah, and I think that's the great thing about this Trump development, which I was never all that happy about because the market always seemed negative about Trump before the election. The market likes what he's saying. And that does me.
Well, we still need to break through 5,500 convincingly. What's happening, of course, is money's going into resources and banks, but they're selling other stocks.
No.
We actually need them to stop selling the other part of the market and say, look, some of these stocks have been hit too hard, and just buy if they want to just, get repositioned in the so-called reflationary type sectors. Move into those.
Well,
that's what the US is doing. We're sort of still going the other way.
Well, yesterday there was a bit of a comeback for health sector. The health sector. Now, they've been beaten up terribly. You've been pro health sector. We and I have been talking about it. It must be value. I think the value hunters will start coming in. I think I'll push the index up.
And I thought about one other really positive thing for 2017, the first half of 2017. And it just strikes me, and we've been talking about super, Peter, but the amount of money that's going to come into super funds and into self-managed super funds as people make big contributions before that 30th of June deadline.
Yeah, good point.
Right? That's all. A lot of that money is going to find its way into the equity market. So there's going to be a big demand pool, I think, for equities in that first half of next year.
Very good point.
Quite a strong bull factor for the market in the first part of 2017.
And we will talk about how people can get money in the super before June 30. But quickly, you're not happy about salary sacrifice and super.
Well, I'm not. There was a great report earlier in the week. It did come from the industry funds, but put that to one side. It did talk about unpaid super. But one of the issues still with unpaid super is the issue around salary sacrifice. Does the employer pay the 9.5% on the pre-sacrifice amount or the post-sacrifice amount? That makes a difference. And furthermore, there's still this loophole that allows employers, and it's probably not, it's not our big companies, it's obviously more in smaller companies where it's not as regulated, to actually count the employee's contribution as part of their 9.5% minimum.
Okay, now,
and that's a big, the government needs to do something. And so far, Kelly O'Dwyer yesterday was sort of...
Wishy-washy?
Wishy-washy. Now, I don't know how
she's good at wishy-washy.
She's good at wishy-washy. She's a very underperforming minister. She messed up the whole super debate. She needs to get on top of this issue, and the government should be legislating, should close this sort of loophole. Labor Party, on this one occasion, is actually right.
Okay, so...
I'm mad about this.
I'm mad. A quick summary of what Paul was basically saying when he said pre and post super. If you got 100,000 as your pay, and 25,000 of it could go out into a salary sacrifice amount. That's the maximum you could do. 9.5% of that would be the employer's contribution, and the rest would be yours. But some employers are actually taking the 25,000 off and saying, "Oh, my 9,000's in there."
That's right, and they're allowed to under the law. So there are some issues. The whole thing needs to be tightened up. And look, super should be integrity around super. Employers should know, and the government should also get out there and make employers start to publish the super contributions. It's too late to be paying it, at the end of the calendar quarter. This is we know from the calls we get on radio, Peter. A lot of employees don't get their super.
They're being ripped off.
Being ripped off, and not necessarily because of unscrupulous employers, but it's one of those last things you've got to pay. If we have this silly system, and we do, then let's make sure it works for everybody.
The government should fix this.
The government needs to fix it. Kelly O'Dwyer, time to do something as a minister.
I'm Peter Switzer.
I'm Paul Rickard. We're mad about money.